Alright, good morning everybody. Just to see if we have some kind of audio today. Come on. Sorry for the technical difficulties. I'm still trying to learn how to set this thing up. Trying to see how I can set this up right now. Perfect. So it looks like I'm live. So today is Wednesday, May 7th, and we're gonna have FOMC in a couple at 2 p.m. today. So the AM session is going to be kind of tricky to trade. Right now, there's going to be a lot of sentiment before the news comes out at 2 p.m. So I'm going to be, for the record, just be watching with you guys. How is it that we're going to be reacting these next couple of minutes? And just to see how we get a feel for the market today. I've been kind of just day trading. I haven't been fortunate enough to be able to look at the charts lately up close, like to the hour kind of structure. I've been focusing more on like a daily structure, just trying to get a tap on liquidity and then have that reach an opposing, session liquidity like London, Asia, like yesterday's Asia, etc., stuff like that. And it's been working out pretty well for me. Again, I've been using the US 100 CFD contract for real-time data, and I've been using the MNQ to set up my labels. So that's kind of how I've been reading the charts. So when I'm on my phone on the go, I'm usually looking at the US 100, and then I'm looking to see, okay, look, this would have been a nice entry. What would have happened if I had entered here? Like yesterday, for example, I was eyeing this. I was eyeing an inversion fair value gap that was reacted here. This is just yesterday's trade. This inversion fair value gap that would have gotten tapped here would have taken price down lower. How lower? I was looking for it to reach a balanced price range that was happening around here on the weekly somewhere, but we only tapped the Asian lows from, what is this, Thursday, from last week's Thursday. So yesterday, Tuesday, we touched Thursday's Asian liquidity low. Reacted off that. I thought there was another opportunity to go up higher to reach, what was this? Tuesday's London session high. But that would have been a nice 1.906, and the sell would have been a 3.3 RR trade, which is nice, you know. It's nice to see when what you're learning is like, oh snap, it's actually going to the levels that you're predicting, and it's a real confident booster, you know. It really makes you want to trust it more, what it is that you're learning here. But right now, in terms of the weekly, what I've been seeing is the following, right? So we have this balanced price range that we have here, and this high low, this structure that was met with sell side delivery, that met speedingly with buy side delivery. So I consider this a balanced price range. So my prediction is that prices to come back down here, react up this balanced price range, to go back up, to attack this external side liquidity, which is last week's high. Get rid of this. Let me try to make this as clean as I can. Okay, and then look at this. Then, as price on Monday, we made this high, got down lower here on Tuesday. I made a lower high. I consider this my next 30U balanced price range. You see that starting on, let's see, starting on here from Tuesday at 9 p.m. onward until the closing of the week, I'm gonna fall back into this balanced price range moving forward. So notice how price has been reacting. Notice how they say bodies tell the stories, wick does the damage. Notice we're reacting off this lower quadrant here of this balanced price range. Boom, sold down exponentially, sold out speedingly again. which is kind of like what you want to see, because I'm treating this as a premium array where like price shouldn't, it should act like a shield. Like price should not go up forward if this is to be supported, right? And again, the theory is that we're gonna go down to this balanced price range on the 60, which is a higher time frame uh, range of liquidity that was balanced, so that we can reach up to this, back to this external. So that's the game plan. And if you want to see something visual about this, I'll do you the favor and get it to you visually. I just gotta look for that one tool that's gonna help me do it. Huh, that's strange. Here you are. So again, the plan is for it to go from Tuesday at 10 p.m. onward, get down here, aim for this external range liquidity. That's the plan, right? And so far, it's reacting up to its little mini structure, bodies, lower. I have another one here. This should act as an inversion. See, look at this buy side, busy, consequent encouragement, acted as support for a bit, broke down lower, and now as long as we close down below, this is in danger, this inefficiency. Alright, moving onwards. If we look at it in a daily form of structure, we'll see that this is going to be our little balanced price range up here. This little buy side that was met with sell side delivery. It's kind of balanced. I would have liked for it to use it as support. Bodies were kind of using it more or less, but remember the higher time frame. We were reacting up this higher time frame balanced price range. So I guess I can see why this was kind of ping-ponging around. And then on the lower time frames, we also have this this thing that I'm looking for it to fill. I'm looking for this to be filled here. So I can label that as my mini DOL, or drawn liquidity, meaning that price will gravitate to these levels. But again, I'm not expecting accuracy today because it is FOMC and it is 9:31. So I'm going to take a look at the US 100 in a bit. But yeah, then on the 15, this is supposed to act as a sell level too. Look at this, ping ponging around. Kind of got an entry here on the upper quadrant, 75%, lower. Now one of my entries is getting in on a session liquidity. So using one of these balanced price ranges and mixing it with a session liquidity to sell lower, you'll see that it came into fruition. So on the 15 level from, let's see, there we go. So from 545 onward, we expect this box to play out. Okay, I'm gonna highlight it purple. So this is my balanced price range, and from 545 onward, up to how far? Till half day. This is gonna be the play, the game plan, if you will, of the markets. And we're gonna be ping-ponging around. You wanna combine this with a session liquidity to get a nice turtle soup. And where do you see turtle soup? You see these London highs, London low, London high. That's a good high right there. Short-term liquidity. Get yourself a nice, decent stop loss, 40 handles. Aim lower. How low? To here. So you would have gotten tapped around 7 in the morning. So that's the pre-market session for futures. It's the pre-market session. Yeah. So that would have been a nice play, but you know, that already happened. So we'll see if we'll get down there to this level today. Let's take a look at the US 100 to see where we at. Okay, so this is the US 100, and for organizations, let's mark this low here as our draw on liquidity. I think I can get rid of this since I don't need it. But this level would be our draw on liquidity right now. And I kind of like to look back and forward just to see. Okay. And I put my faith on the futures market. So whatever the futures market's doing, that's kind of like I'm going to be entering on the US 100 contract. So you see how the US 100, we didn't make that low specifically. But on the CFDs, it just comes out as like an open level. It's fine. That's why I'm referencing the futures market for this. And again, we're looking for price to get down lower. At least for now, until FOMC starts. But speaking of FOMC, are we going to anticipate a high resistance liquidity run condition? So let's see here. Regular trading hours, open. We close at, alright, so I'm going to be marking this down on my notebook. My handy dandy notebook, guys. So we closed on 19,876 in a quarter. And when I'm at my job, I'm actually writing these levels down. Oh shoot, I went to the other. Okay, and where are we now? We're at 1909, 909. So that is going to be a premium opening. So if that's going to be a premium opening, let's see how we acted here. Okay. Little moment of silence here. And let me know what you guys are doing. Are you going to be trading the FOMC? Are you going to put something on the market today? Let's see here. So we have this MI. All right. So where do you see the, oh my gosh, it's 936. Okay, so where do you see the first presented fair value gap? Not here yet, right? Okay, so we're waiting. We're waiting. I don't know about you, but I don't really feel comfortable trading today. Like, again, we have FOMC later. Anything can happen. I was analyzing the higher time frame levels. We're talking like daily and weekly, and it looks like it can go either direction. Like both directions are being supported in terms of the drawn liquidity. So right now, I'm just gonna stick to day trading, short-term trading, and maybe scalping. I'm trying something new this year. I'm stepping away from scalping for the time being. I got burned so many times. So if you remember back in the mentorship program that we learned about, he talks about on month 5 from position trading, swing trading, month 6, month 7 is short-term trading, month 8 is day trading, and month 9 is scalping. Yeah. So I kind of when I'm analyzing the charts, like my brain is also going back into those lectures, if you will, and kind of just trying to stay organized in my head. Like, okay, this was taught in short term, this was taught in scalping, this was taught in day trading, and that's kind of like how I'm referring back to my knowledge, if you will. Like this is a lot, man. It's a lot of information that you have to retain, and being able to retain something is a skill too. And when you do certain things, recreational things outside of trading and your job, you do these recreational activities. you could mess up your memory, and before you know it, you're not able to do recalls on things you've learned. Or you can, it's just that it feels like there's a barrier that's preventing you from recalling something. And it gets really annoying, which is why, like, you just need like 100% of your focus all the time. And it really is like a lifestyle because you gotta keep up with these levels. You gotta keep up with what is that we formed yesterday, 2 days ago. Like at least be up to date with the market. At least like at least 2 days. Like if I haven't seen the markets all week, I would refer back to the previous 2 days because like at least I should be knowledgeable in terms of what happened between those last 2 days. So if it was Wednesday today, I will be just looking back Tuesday and Monday. Like what did we form? What are we structuring? What kind of liquidity pools exist? So in this case, for example, we have this liquidity high pool, liquidity low pool. Which are we gonna go towards? Okay, this was supposed to be a bullish balanced price range to get up to this external range liquidity. Did not. One of my other entries that I like to do is once we break out of a BPR range, when we close out of it, I expect it to retrace at least to 75%, get into a stop loss entry, and then continue the move downward. What do I mean by that? So, for example, this green box represents that balanced price range. We closed below it, so we anticipate a 75% retracement or a lower quadrant. Just think of it like a quadrant level. Like I see this as like a 0, 25, 50, 75, 100, right? So even though you know this guy calls it as the lower quadrant level, I will call this as a 75% entry. I mean, it's nothing new. It's just like how I organize myself in my notes. Get down lower. Just turn the reach quick. So far, it would have been pan out nicely. But that's nice too. So this turtle soup. See that? Okay, buddy. Let's see. So what am I seeing right now? I'm seeing a SIBI down here. I'm seeing an order block up here. I'm seeing a okay. I saw a swing high here, tapped out, retracing. We could be retracing back up here. Now I'm only sticking around a couple of minutes today, guys. Like maybe like a 20-minute stream. So by 10 it should be out, or by like 9:55ish. I gotta go somewhere today. So it's like a privilege, It's like a privilege to show up and look at these markets because it gets busy when you have a job, things to take care of, miscellaneous things, and it gets in the way, man. In a way, it's good when you're starting out because it doesn't keep you too invested into the market. That's gonna make you want to do crazy, emotional, impulsive decisions. Like if you're just in the market 24/7, you're gonna want to take every single fluctuation in price. And I know that because that's something that I did. For 2 years, I just looked into the markets like a lot, and I was just taking up, down, up, down, up, down, up, down, risking my funded account levels, challenges, and I wasn't getting anywhere. It wasn't giving me the results I was looking for. Therefore, it didn't positively encourage my mentality, my lifestyle, and it didn't make me feel good about myself. So I've learned to step back. I've learned to just wait a little longer. This year, I'm trying more of a daily uh, day trading approach. So I'm not exactly going in there hitting every single mark. Instead, I'm just learning to practice to step back a little, witness the market from a more longer distance, and just wait to see if it gives you something that's worth taking. As I've mentioned in my previous streams, I'm aiming for a 3RR kind of entry. So trades that offer a 3RR probability, those are the ones that I want to take now. For example, like this one, beautiful, this turtle soup. This is back to 75 level. That's nice. Okay. So let's see here. Let's say we want to take this order block, right? Let's say we strongly believe we're still going to be going down to that level. We can hit 40 handles, reach here. Look at that. And kind of do it as a continuation trade down lower. Is it 940? Yes, it is. So let's look at the ORGs. Oops. Where are you, buddy? Wow, you see, look at that. I haven't even updated my ORGs in a while. So let's go back here to regular trading. Move this guy up. Alright, so premium range gap. Premium range opening, sorry. Closed opening. Closed opening. Oh, we're still kind of in here. Okay, closed opening. I really don't think we're gonna head down lower. Close down this. Oh shoot! What did I do? What did I do? Go back. Go back. That's nice. Look at that. But you're gonna ask me, for how long should I hold this idea? You should hold this idea until 12 o'clock. 12 o'clock, 11:30, around the lunch macro, you should hold on to this idea. So I'm gonna respectfully move my stop loss here and then hit that. Okay. Another quick moment of silence here, but yeah, right now again, lots of risk because of FOMC later. So the AM could be a little choppy. We already confirmed that it's going to be a high resistance liquidity run condition. Look at that. Premium opening. So down here a little lower. What is happening? It says New York AM lows. Sounds good to me. You could also aim down to here. Come on. Sorry, I'm talking about something else, not the trading. Trading, I still think we're gonna head down to this to fulfill that ORG. Maybe even tap down to yesterday's New York AM. So far so good, guys. I really like how this is reacting. Get down lower. Because again, we reacted up this balanced price range, 75%, lower quadrant, which means what? I treat this as like a gap, liquidity. If we're reacting up here, we're extremely speedy. If it didn't even touch it, we're extremely speedy. But because we got down to this level, we're still kind of speedy to get down lower. So we'll just see, man. Come on, dude. Well, I missed the shot anyways. Oops. Okay. Doesn't want to let me make an alert. Fine. Where are we in terms of the first percentage fair value gap? You don't see it, huh? It's right there, buddy. See that? That's our first percentage. Okay. Want to make your stop loss smaller? 20 handles? There it is. It's nice, no? What's the structure in the hourly? Let's see here. Okay. What about the, excuse me, the 30-minute? Yeah, that order block would be very influential. Tap that. Lower. Hmm. Sorry, that was annoying. Hopefully you didn't hear that. to that inversion fair value gap that we just saw. Look at that. Busy. Busy. And up higher. Okay, no problem. So price like, nope, don't want to give that to you today. Okay. And we're just going back up to here. Now, it's a matter of how would I have felt if price was back up here again, and I'm on this trade. It would have been felt tough, no? Remember, it's high resistance liquidity. The price can make as much damage as you can. So that's gonna be very it. That's gonna be very it. There goes my English. But I'm gonna be monitoring this, see if it can get down to these levels or this one down here, and then we'll see what happens. But again, expect for the 2 p.m. news later, and we'll see where we stand. Alright, so thank you so much for watching, and I'll catch you with the next one. Again, target down here. We'll see what's going to happen because FOMC.